Good morning, everyone, and a warm welcome to our broadcast. Today, we are going to talk about a very important topic in the world of commerce: sources of business finance. Every business, whether small or large, needs money to start, run, and expand its activities. This money or finance can come from different places. Some sources are internal, meaning they come from within the business, while others are external, meaning they come from the outside. Let us now explore these sources one by one.
Business finance can broadly be divided into two categories: internal source and external source. Internal source refers to the funds that are generated inside the business itself. External source are those which a business raise from outside parties such as investors, banks, or the public. Both sources are essential, as internal finance usually covers only a part of the requirement, while big projects or expansions need external funds. The right balance between these two ensures stability for the business.
Retained earnings. Internal source. One of the most important internal sources is retained earnings. This means the portion of profit that a company decides not to distribute to its shareholders as dividends. Instead, it keeps that profit aside and it reinvests it into the business. Retained earnings are often used for expansion, modernization, or to face unexpected emergencies. The main advantage is that the company does not need to depend on outsiders. However, the drawback is that only profitable business can use this source.
Equity shares ownership source. Among the external sources, the most common one is the issue of equity shares. Equity shareholders are the real owners of a company and they enjoy voting rights in important decisions. They invest their money with the expectation of returns, but the dividend they receive is not fixed. It depends on the company's profit. Equity shares are risky, but they also have the potential for high rewards. This makes them attractive to people who are willing to take a risk in return for ownership in the company.
Another important source is preference shares. These are safer than equity shares because preference shareholders get a fixed rate of dividend and they are paid before equity shareholders. In case the company winds up, they also have a prior claim over the assets. However, most preference shareholders do not have voting rights in the company. This makes preference shares suitable for those who want safety and steady income rather than ownership or high risk.
Debentures, borrowed funds, a very popular way for companies to borrow money is through debentures. A debenture is a kind of certificate issued by the company to the public in exchange for money. Debenture holders are creditors of the company, not owners. They receive a fixed interest regularly, whether the company makes profit or not. The advantage of debentures is that they provide long term funds without diluting ownership, but the company must repay them on time, which create financial responsibility.
Debentures, businesses also use other borrowed funds. For short term needs, they can use bank overdrafts, trade credits from suppliers, or commercial papers. For long term needs, they take loans from banks and other financial institutions. Borrowed funds are important because they allow businesses to run daily operations smoothly and to finance big investments. But they also carry the burden of repayment with interest, which must be carefully managed.
Special and foreign sources. In addition to this, these are special institutions that provide finance, such as the Industrial Finance Corporation of India and the Small Industries Development Bank of India. They give financial support for setting up and expanding industries. In today's globalized world, many businesses also raise money from foreign sources. These include foreign direct investment, external commercial borrowings, and loans from international banks. Such foreign finance helps businesses gain access to advanced technology and larger markets.
Some of the sources of business finance are many, ranging from internal funds like retained earnings to external funds like equity shares, preference shares, debentures, bank loans, and foreign investment. Each source has its own advantage and disadvantage. A company must carefully choose a combination of sources depending on its size, purpose, and financial strength. Finance is truly the foundation of every business, and wise financial planning ensures growth and success.